kick off with this tight agenda. This day devoted to global economy has the figure of two leaders, the Chinese dragon and the U.S. So let's start with the second one. We want to know in this new regime, after Biden era, how after Trump wanted to isolate from the world, Biden wants to do something. What's his intention and how U.S. will play the role in the world economy? Which is going to be the role? Is it going to impact or not? And especially in Latin American countries, which is going to be the politics, but in general all over the world. And for this we have a great speaker. Thanks to Dr. Connolly from the Colegio de Mexico, we have been able to have him. Judith will be so kind to present this speaker from Colima. Go ahead, Judith. Thank you very much. Dr. Juan Gonzalez Garcia is a doctor in economic science by Politécnico Nacional, and he's commissioned to the economy school in Colima, and he studies the Asian Pacific economy, particularly the Chinese and Mexican economy from 25 years ago. And from this economic has made research in 20 countries of the Asian Pacific region with more than 300 conferences in Mexico and Latin America. He has written 8 books, all of them in college editorials like Porrúa, Siglo XXI editorial, more than 100 papers in magazines, and he is national researcher level 3 from CONACYT researcher system. Today he will teach perspective of the United States of the era of John Biden. Go ahead, Dr. Gonzalez. The floor is yours. We believe your microphone is off, please. Doctor, your microphone is up. My apologies. Can you hear me now? We do. My apologies for the microphone. Before anything, I thank you for the invitation that you made to participate in this 22nd yearly Congress of UC&CS Global. In addition to the national presentation, you have a great organization, good quality, human quality. It is patent, very moving messages. Regretfully, we're experiencing this situation, but go ahead, we will continue improving, and we want to thank for the presentation of my bio, and I would like to start by mentioning with you the following. Obviously, in some of the research and work that I have done about my subject matter of research, which is the Chinese economy, I have had to analyze its relationship with the United States. Moreover, from the reestablishment of their relationships, but especially when the United States was banning China to get into the WTO. Then, in my research of the United States, I studied the crisis of 2009 that was really unthinkable for many researchers of the economy, because it was originated in the most powerful country of the world, and very few thought this could happen. Many of us studied economy based on of what was done at the big crack of 1933, the Big Depression. As of this crisis in that country and economic policies that were implemented, particularly following the prescription of John Maynard Keynes, who was one of the few economists, as it has been said in the famous words of Einstein, who was adapting and changing to new proposals to explain situations that were not explicable back then. Now, my consideration is that COVID-19 is ruling the world in the last years, and it is exerting impact in our behavior from the individual ranging to the family and company environments, and it is present in all businesses, concretely in governments, which is the most visible instrument of the state action nowadays. So I dare to say that COVID-19, in the case of the United States, is rising as a factor which is cracking the economy. Obviously, this is one of the economies that reacted first before COVID-19 with health policies, but particularly economic measures. Therefore, if you allow me, with this presentation that I'm going to give, it is made up by the following points. Could you please help me with next slide, please? Thank you very much. Generally, as it is common in the academia, I am going to give an introduction and say why COVID-19 is threatening the power of the United States, which is prevailing all over the world since 1945 up to date, how it affects Mexico, the world, and what's the reaction of the United States through its anti-cyclic economic policy and rescue plans, which bring down to the first order the figure of the state acting, which are the short, mid, and long-run measures beyond this decade. I believe the 20th, which is starting. I am not so sure that in the 30s, but obviously, as Dr. Mubarak was saying, among the big stakeholders of international economy, China is clear about the long term for the mid of this century. And then I will finish with conclusions, where I will try to synthesize what I am explaining. So please bear with me. Next slide now, which I am going to present by saying, here I am saying that it is naturally United States the main supremacy all over the world due to the size of some macroeconomic size and its weight in international economy. Obviously, this is related to trade, prices, GDP, interest rates, savings, among other indicators, and moreover, its participation in the production all over the world. According to the World Bank and the IMF, it is the first economic power, the second trade economy, and the major investor all over the world. The country attracting the top immigration and extended its cultural influence, the origin of many brands and world patents, obviously, only as a sample of the first economy all over the world. However, it is the country that in this century has been affected by two economic crises. The financial one that I mentioned a few moments ago, starting in 2007, and also COVID-19, which is the one we are experiencing. Last year, it had its biggest expressions, particularly in the drop of the GDP. Next slide, please. Then, as a result of the U.S. economy evolution, COVID-19 has made patent the deterioration of this economy, not as a product of the pandemic solely, but it is a long accumulated process that now becomes patent. Lack of balance in some economy variables, but mostly a constant deterioration on economic and social infrastructure, and obviously socially, particularly in those anti-COVID plans that were fostered last year in the then President Trump. And this year, in September, that were triggered by Biden. One of the results is a lack of competitiveness, drop in production, and the increase of inequality and poverty all over the world.
Unfortunately, in the case of this country, is one of the countries that are the most unequal of us. And poverty is reappeared during the 2009 and came back last year and up to now. Next slide, please. Well, under this context, I would like to ask the following questions. It is U.S. in an initial phase of a loss of its economic hegemony, COVID-19 has put in evidence the loss of international economic relevance in the U.S. What has been the anti-cyclic economic policy and the main actions of the U.S. to fight against COVID-19? What's the expectation of the U.S. economy in the short run? Well, in the short run, it's from this year to the following week. It's 1 to 3 years. That's the expectation. And the next year, we need to determine if the path will change or not. The general goal is analyze the impact of COVID-19 in the U.S. economy and specifically to describe the anti-cyclical program of the U.S. to fight against COVID. Analyze the evolution of the economy in 2021 and their perspectives in 2022. The main hypothesis, the U.S. has seen its economic hegemony broken by COVID-19, and the secondary hypothesis, the economical crisis caused by COVID-19 will define the future path of the U.S. economy. Next, please. After the item 1 of the introduction, we will see item number 2, the hegemony of the U.S. The U.S. became, after the Second World War, and the hegemony of the capitalist world because there was no country to compete with. In fact, it built a new international economic order that after the Second World War, and such order defined by Stein, it constructed a structure based on international system, based on its image. What kind of structure we're talking about? The UN, International Monetary Fund, and World Bank. 2 years after, in the GATT, the OECD, the UNCTAD, and regional banks that are the basis of the economic structure of this new economic order. During the decades of the 50s and beginning of the 70s, the U.S. economy, like obviously the rest of the countries of Europe and Latin America, and Mexico included, all presented the highest economic growth. It seems that the speaker has audio problems. Let's give him some minutes so he can connect again. It seems that the speaker has bandwidth problems. Just a few seconds. Okay, can you hear me okay? Yes, we can hear you. So I was saying that during the 50s and 60s, internationally wise, the U.S. economy reached its peak, and also the American dream was confirmed because of the opportunities, and based on freedom, it is possible to have access to better life standards. Thank you. Well, unfortunately, not everything lasts forever, and during the 70s, with the withdrawal of the gold pattern in 1971, and the first oil problem during 73 and 74, though, was the first indications that the U.S. economy started to have structural problems, mainly structural problems, as I said before. And how these events happened, because increase of energy prices at the end of the 70s, the first indication, the first oil crisis, brought the crisis of energy resources. And at the end of the 70s, well, we remember that Mexico was part of this international stage as a producer, oil producer, extraction of oil mainly. So Mexico was benefited. This was the second wave of an increase of prices that affected a lot of countries and confirmed the presence of inflation, unemployment, imbalances, external imbalances, and deficit of the government, and loss of competitiveness. And also, those imbalances were corrected with a neoliberal cut, and therefore the government left gradually from the economy. The participation of the government in the economy was really evident, because following the financial policies recommended the participation of the government through fiscal policies. So this did not take into account the taxes that would be generated in the long run. And in the long run, and along with external events like the withdrawal of the gold pattern and the first oil clashes, this led to an impact in international economies and the U.S. economy. In England and in the U.S. at the end of the 70s, or at the beginning of the 80s, politically, in England, under Margaret Thatcher government, and in the U.S. with Ronald Reagan, this type of policies were implemented, where basically it was assumed that this was the most efficient one to allocate the scarce resources of the society, and the government would have to be reduced, having less participation in the economic activity. Even when globalization, regional crisis, and of some countries gave the opportunity to show the strength, I'm talking about the U.S., Well, the U.S., since 1945 up to now, it is the most powerful country. It's the main economic power. And during the crisis of 82, saved many people, like in Mexico, because they had external debt. In 86, he strengthened the countries with loans to face the new drop of energy prices, and also the Mexican crisis at the end of December of 94, beginning of 95, where it was offered a loan for more than 50 billion to Mexico to address the problem. It was paid back then, or during the crisis, Asian crisis, particularly in Thailand and Korea in 1997. And not only in Eastern Asia there are crises, but also there's a crisis in Russia, Argentina, the crisis at the end of the last century where the U.S. Expressed as itself as a country that can help to solve the economic problems in some of the most important regions of the world, and obviously with its neighbor country. However, at the end of the last century, the 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 preamble of the crisis of 2009, and this was given with the bankruptcy of the companies .com at the end of the 20th century, and the entering of China to the World Trade Organization. And those were a prelude of the crisis 2007, 2009, and this is the first impact on the U.S. hegemony associated, to the lack of financial regulation. So between 2009, a lot has been written, but the truth is that this crisis allowed the United States to implement a series of economic policy measures to face the bankruptcy of the main financial intermediaries like bank and consultancies like Lehman Brothers, among others, and where it applied resources, if I remember well, $980,000 million that was the bailout, the largest bailout given by the U.S. to this sector to prevent the expansion of the crisis. That in some way it was solved in 2010. There's a recovery of the economy, and in some way the bailout allowed the U.S. to maintain its economic hegemony through a proactive and moderate fiscal policy. But the structural weakness was obvious, and in 2017 and 2021, as we have just said during this Congress, the isolationism, the nationalism and protectionism that are the main characteristics of this country as well as their confrontation with its main trade partners and the withdrawal of some multilateral agencies like the TPP, UNESCO, the Council of Human Rights of the UN, the Court of Paris, the World Health Organization. So the U.S. lost relevance that was exacerbated with the pandemic and its discourse against China as a culprit of the pandemic. So the U.S. in some way continued to be a country that is surveilling the stability of the economy. Well, he always give all the resources that are necessary to stabilize it, but it was really paradigmatic that in the Trump government, and reverted what historically was built internationally. When withdrawing from the most important multilateral agencies, but mainly from the standpoint of economics, he reverted all the policies of pro-trade, free trade, fostered by Barack Obama, who signed the TTP 12, as we all know. 12. We have this TTP without the U.S. that is generating a series of expectations regarding the possible request of incorporation of China to this agency, and Canada and Mexico, because of the clause that was enacted in the U.S.-Mexico-Canada agreement, in which it is not possible that these countries signed trade agreements with countries that do not have a market economy like China. Well, let us continue. Well, as you can see, these graphs illustrate information in the U.S. case compared to China, because in some way are the two most important economies in the world. But since the decade of the 60s to the 70s, the growth of the U.S., with some important drops, but after the oil clashes during the 80s and up to now, this growth was downward. In current terms or monetary terms, there's an increase, but this is measured in current dollars. But the truth is that in a long-term path, we know that the U.S. economy has increased, and this is better illustrated in the next graph, where we see how the relevance of the U.S., representing 40% of the global GDP, now is around 25%, and how its counterpart China has been growing, representing a little bit more of 2/3 parts of the value of the U.S. economy. Next. And as I was saying, we start to see a deterioration, particularly you can see that as of the decade of the 70s, but mainly during the 80s and 90s, the U.S. had a deficit in its commercial exchange with the world. Even China became in one of the main commercial trade partners with the U.S. and displacing Japan, Germany, Canada, Mexico and Canada, even with NAFTA, and recently with the new trade agreement. And this at the expense of the trade balance with the U.S. The U.S. is it's the main investor of the world, but the trend was reduced and also experienced a strong presence of China as an investor internationally wise. Last year, China was the third international investor, and in some way it is competing with the U.S. in the service and manufacturing services, mainly in high technology goods. We see how the deterioration of the current account of the U.S. is illustrated, from which it led to, with respect to the former administration, to take some measures against the main country with which it has had a deficit, like China, and in some way the deficit was reduced. So here we have one of the problems that the U.S. have, which is not recent, along with the deficit in the current account and in the trade balance. We have the deficit of the government and the debt of the U.S. This is not new. This is happened during the 80s. But if you see, it was maintained and continue growing, like the deficit and the debt with the U.S. Currently, it is considered that one of the most important risks that the U.S. economy has is inflation. Inflation, if we go back to the 40s or 60s, when it didn't matter to have inflation because the economy was recovering and growing, well, it was not a major concern. But currently, when most of the banks in the world, and mainly in the US, have the inflation goals policies is maintained 3 plus minus 1, and hoping that it will be exceeded. The Fed, the Federal Reserve, has concerned them because probably is one of the main indications that the U.S. has not been able to control, like it happened before, that one of the imbalances that this economy is presenting will be like broadened. Next. And this is one of the main questions marks. Mexico, the U.S. declared that in 2023 will continue maintaining the interest rates flat. And this policy, monetary policy of the last few years, implemented as well after the financial crisis of 2009. I'm sorry, there's no audio. No audio. Yes, it seems that he has some problems in his connectivity. Yes. I think that the signal is not good. So one of the main concerns in the U.S. in the last few months is the return of the inflation phenomenon. And so this return would not be so as high as the one that they had during the 70s or 80s. So it would be like between 4% maximum to 6%, where all the fiscal monetary policy are coordinated to prevent imbalances in prices. Obviously, this generates concern. Thank you. And here we have one of the subjects that, in my opinion, it's being gradually studied regarding poverty and inequality in the U.S. The main economy of the world, which is the U.S., where many international migrants one of their aspirations is to live in the United States. The inequality of income is high, and poverty is evident. One of the most influential economists of this country, but internationally, like Paul Krugman and Joseph Stiglitz, raised that this is one of the results for the U.S. of the application of neoliberal policies were favoring the business sector, like a capitalistic class. The low-income population was affected. On one hand, they made the inequality to increase the U.S. is one of the most unequal countries of the world. What is not the most unequal, but the poverty as well is moderate, so to speak, affects the great amount of the population.
In fact, from the point of view of some analysts, political change is mainly given through some faulty attempts of neoliberal policies to improve the population conditions. In the United States, some people say that certainly a good part that could explain the change of government is precisely in the fault, in the failure, non-compliance of what was expected to achieve as a result of the implementation of neoliberal policies. Next slide, please. So, here we have point number 3, and I want to make a summary. As I said, the United States is the economic supremacy, and it has grown both at international level and inside the country. There are many imbalances in some markets, and at the same time in some indexes and variables that are really important to measure any economy. And we can see that inequality and poverty is present still. It's not gone. Obviously, within the COVID-19 pandemic context, same as in many other countries, the poorest population, the lowest income population was the most affected. All the population, but particularly those with the lowest income. And that's exactly the context of COVID affecting the world and the United States. United States, at the end of the last year quarter, became the epicenter of COVID. As of today, we can confirm this data. It represents about 18% of contagion all over the world, and it dropped 14.8. It accounts for that percentage of deaths. Due to its global impact, the economic crisis of COVID right now becomes the biggest crisis of the present century. Naturally, uncertainty is still present, though not the same as last year. Now it decreased due to the application of vaccines in some countries. Currently, in spite of having about 70% of the world's population with vaccines, there are still some concerns for the first semester of this year to complete both shots. So there's still a risk factor. Due to its global impact, the COVID global crisis could be the biggest crisis. And how it is expressed in 2020, due to the GDP drop in consumption, trade, unemployment increase, speculation in stock market and capital markets, and also reduction in currency supply, interest rates, and the issuance of debt. And this is one of the biggest concerns. Differently from the big depression of 1929, 1933, or the one of 2009, this crisis is exogenous because it is the result of measures and actions given in the world to counterfight contagion. Therefore, we can induce this economic crisis. Before this crisis, governments and fundamentally they applied policies and instruments of economic policies, and fundamentally the fiscal policy, the currency policy, both of them of expansive nature to counterfight COVID-19's impact. Next slide, please. Now, we know the impact that took place last year. Back then in May or April, we were really fearing the worst, that it was even higher than the last depression. It was already forecasted that it was going to be bigger. So depending on the measures undertaken by each country, it was going to be bigger or smaller, with the exception of Vietnam and China, that were the only ones that had economic growth. The rest dropped. The United States dropped. Not what they initially expected, but as a result of the measures and actions that were applied, it is expected that it has a V-shape recovery. We're just about to finish our last quarter, and depending on how vaccine acts and how markets react with some events, for example, the withdrawal of troops from Afghanistan created some adverse perspectives in some markets, and they are present in the economy. But at the end, it is expected that this and next year the economy will be recovered at international level, particularly the one in the United States. Out of this chart, you can see some facts. If the United States had not devoted all the resources for rescue last year, probably the drop would have been between 6 and 7%. Fortunately, it was one of the countries that had the capability of acquiring debt, such as the United States. But as you can see, indebtedness, it's about 132 points. Naturally, this will have implications at the short, mid, and long run. On the other hand, its current account deficit is still present. And production issues, social issues in the population are still in place. This month, there was a high expectation on if we were going to have a fourth rescue plan, and now it is confirmed that no, but the uncertainty, a good part of the population naturally were benefited from those transfers that the U.S. government gave both to the population belonging to the last deciles of the population, to those businesses that were most vulnerable to the shutdown, the lockdown. Next slide, please. Another factor which is also important is high unemployment. Nothing related to what we had during April, May, June, and July last year. However, this is one of the biggest concerns. Now, with the money transfer suspension to the population, unemployment benefit requests are going to increase. This chart shows the impact of the industrial sector in the United States with unemployment, and it also depicts how this country channeled major support to companies that were affected with this total or partial lockdown, and also how it took place following the instructions of the government with the health policies. And many of them were considered non-essential activities. Okay, you can see with this chart how was the impact, as I mentioned in my previous slide, and the impact on some industries in general, industrial production, and how it is expected that this year there would be some recovery. And this is what I was saying. Stock market prices and markets, due to its own nature, they react, they anticipate many times. They react more sensibly to the impact of events, not only economic, also political, army, environmental, etc. At the end, it do make some implications in current markets, and the United States is not the exception. There is a chart. You can see information about what I was saying. The U.S. currency policy in general, with yield and production offered by the Treasury bonds, and how they are dropping, and probably they will continue with this trend to make feasible this recovery in the country and to keep it. That the 2022 expectations are improved. Next slide, please. So, in a very punctual manner, we can see that the United States is facing, as many countries, COVID-19 crisis. Obviously, it is not the same to face it with very scarce resources or with good capabilities or debt ability by issuing bonds or public debt. Therefore, United States, as I was saying, as many countries proceed to face economic crisis, they turn to orthodox practices, economic orthodox praxis on what to do. So what they use is using the king's recipe to face economic crisis with expensive methodologies. Talking about expenditure policies devoting 3.1 billion US dollars to back up the economy and be able to help the most vulnerable population. This is one of the plans in March. The first rescue plan was authorized with $1.2 billion and then one for 900 millions. Both plans allowed the country to face the biggest economic depression since the last one in 1933 and to resolve this contingency. This amount of 3.1 billions, obviously it's above that 10% of the GDP of the United States, which is really significant because in regular terms, the deficit of almost any country, if it is close to 3%, it is considered risky. So now let's imagine, well, not imagine, most countries all over the world got into debt and they applied some tax policy regarding write-offs, also payment cancellation, reduction of collections, and support to companies not to lay off employees. We will see this in more detail, but this is what happens. This is a sample of the actions, and you can see that obviously there are some results. Next slide, please. So, among the main sectors considered in the rescue plan, in the first rescue plan, we have the following. But here I need to describe the amounts and some of the items where these resources were targeted. As you can see, they are naturally resources that will serve the least favored population in the last deciles and poor population, but moderate poverty, but also to those companies that do not have resources to pay salaries. Obviously, they are asking them not to fire workers. The government is also looking at big profits, not to have more credits to get access to these resources. In general, it is a policy carried out by the United States. In simple terms, it means the comeback of well-being status. This status that ruled in the 50s through the 70s, where in addition of making the government an important, relevant economic actor. In Mexico, it was even manufacturer of goods and services. In the case of the United States, we have this return of the well-being status that looks for the population well-being before, even if it sounds weird, the impact of the pandemic, which is a constant concern, and obviously channeled resources by the United States do not resolve the whole problem. But somehow they are some support. The problem now it's going to be that the term, as I said, September the 30th, it's the final date, and we're going to see how dynamic is the recovery of the United States. Now we're having some forecasts that this expected impact of rescue plans in the United States will have even 1 percentage point less in the impact of the recovery of the GDP. Next slide, please. So this would be just a complement, looking at the main amounts and items where resources were channeled. Can you help me with the next slide, please? Then, in the rescue plan of President Biden, $1.9 billion US dollars, support is extended in the same sectors. Some amounts dropped, obviously, but in essence, the target of these rescue plans in an aggregated manner represent a very important amount of resources. Obviously, they are considered within the expenditure of the government. And as I was saying a few minutes ago, this increases significantly a variable, and we will have to see whether this economy recovery it's going to be enough. So revenue or income expected to collect by the government will come in to cover for part of this debt. Next slide, please. So now, on the short term, it is confirmed, and this is obviously from what we have for next year. It is expected that the United States will go on, not now with the tax policy, but currency policy. And as I was saying, related to the money policy, there's a new movement in interest rates, and this somehow implies money in the economy. And even if we're closing the tap of the money that could be considered like easy money, this somehow impacts on inflation, though just as in the next years after the Great Depression, this inflation is not determinant now to consider it as a big threat. It depends on the evolution next year. Next slide. From now to the end of the year, that the government may analyze a new program or support package. From the political point of view, to definitely close this period of counter-cycle policies that started during Trump administration. That's when we had more resources channeled. And we will have to see if during Biden's administration, it depends on the evolution of this last economic quarter. It could mean the analysis of this possibility, or definitely saying this is it, and let's hope that the economy will make its homework, that it starts by itself speeding up, and that it will incentivize that recovery is wider from what we were expecting. Probably only 2 or 3 years for growth to pre-pandemic levels, and also the pre-trade war with China. We need to recall that this also affected in about 0.5% in the GDP of the United States that was planned early in 2009. Therefore, okay, next slide, please. And I'm just about to finish. So, talking about economic effects of stimulus, the U.S. economy contracted, and thanks to this economic support, only 3.5% in 2020 compared to 6.8% of the Eurozone and 9.2% of the UK. Out of the most recent estimations of GDP in the United States, it seems that several of these percentage points are the result of Biden administration with its recent proposal that considers the extension to medical benefits against climate change, as well as granting the U.S. citizenship to a lot of immigrants. An unemployment rate that would be certainly expected going from 5 to 5%. So, in spite of economic support, almost 4% of U.S. citizens faced problems to pay for their expenses. 3.5 million people less in payrolls.
People that received the 3 rounds of stimulus payment used the largest amount of money they had to pay their debts or save it. And this extraordinary income was considered really important by the people for their short-term finance. well, they had like they received like bills from heaven to solve the problems they had at that time. Next. And as I said, one of the topics that are like one of the most concerning ones is what happened that since the 1st of March 2020, the Treasury loans increased in $5 billion, with 46% of the debt issued since March was at the medium term, while 34 was 1 year or less, and the long term represented the remaining 20%. The government is experiences low interest rate because of the debt basically becoming an advanced capital. The letters to 3 months paid the investors a 0.05% of interest versus interest paid in January of 2020 of 1.57%. Well, this is the graph where we can evidence the increase of public debt of the U.S. Next one. Inflation that I've already mentioned. Inflation in the U.S. is 5.3% in August 2021. The openness of the economy, there's an evident increase of the expense, so this pressures the demand, causing a short-term inflation. Due to the interest rate reduction, there are no restrictions for no longer for not doing it. Vulnerability before the application of just-in-time in the inventory of companies. Next one. So because the support of the government was no longer provided, the inflation will start to decrease, being the demand one of the forces behind its effect. It's less likely that an inflation of 5% will end up by becoming a two-digit inflation like in the 70s. The Fed have started to send positioning due to the inflationary pressures without being drastic measures precisely, but just announcement of what it would be eventually expected. The inflationary effects are also related to the increase in employment. Obviously, that higher the demand, like more growth or payment to attract the workers, and this is reflected in higher costs of production and higher prices or inflation. This is the behavior of inflation. So if you can see, so as of February, March, the prices are high. With the last 4 months, from May to August, generated concern in terms of what's going to be the end result regarding inflation. Probably there will be less than 5%, but in reality, we still don't know. We need to discount the last quarter of the year at the end. And the end of the year is where we normally have like an increase of inflation. The data showed by the Census Office in the U.S. showed a decrease in the difficulties of the Americans after the approval of the economic stimuli. We all know that the payment of $1,400. However, despite of this, there's 18 million of adults that do not have enough to eat and 11 millions that are behind with the rental payment. And these conditions that are more evident in people of color and Latin communities. So we can see again all the inequalities in the U.S. in terms of in the income of population and the lack of resources to fulfill the basic needs. Next one. So we have information that illustrates very well the poverty. If we see the three bailout plans, 30 or up to 50% of the resources distributed in the different sections bailout were to address the population most at need. So this is found in the last decile, but this is relative because in the U.S., who received this kind of support, where the total amounts were around $150,000. But obviously, the cost of livelihood is higher. With those resources, most of the countries in Latin America, we're talking about middle class sector, but that's relative. Next slide, please. So it is expected that the economic growth will continue be high in 2021 due to the high rates of vaccination and the restarting of the economic activity. So people will spend more, and with the momentum of the savings during the pandemic, like people that used to travel to Mexico, the private investment is growing at high rates because of the changes derived from the pandemic. So the benefits are in the technological sector. Something that I didn't refer to is that unlike the two first bailout plans, in this one, this is emphasized on the maintenance of the macrostructure. The upgrading of this and the possibility of exploration of new investments. Why? As I said before, the U.S. is losing competitiveness and productivity, and this is explained by the economic infrastructure of the U.S. that is left behind. I don't want to say that is obsolete, but with respect to other countries that are investing a lot in economic infrastructure, and the United States was not doing so. So this is one of the differentials of Biden's policies. But during Trump government, there was an expense and fiscal expansive policy. But in this case, the economic infrastructure is considered. Next one. Well, it is expected that the unemployment rate will eventually come back to the pre-pandemic levels, approximately 4%. Hopefully, thinking of Mexico, if the U.S. is doing well, Mexico is benefited because of the economic relationship. The Fed will maintain rates close to zero until the end of 2023. Effects in the expense patterns, for example, the consumption of goods, there was an increase of $103 billion in 2020, and the services dropped $556 million in the same period, because at the beginning said that the COVID is the one that rules. If it's controlled, like it is being controlled, and next year we can say that it's being controlled, so this will give more certainty. But like we say in the economy, is during the expectation of last year, like it happened at the end of last year, there was the first big wave of infection. It'll be concerning. Next one. Based on the economic policy measures, 2021 will be confirmed as the year of recovery, and the expectation of 2022 probably will be optimistic. However, the cost of the recovery could become an obstacle to confirm its economic relevance in the U.S. For this, the Fed will maintain rates close to zero up to the end of 2023. So this gives certainty to the international community and their main trade partners and global investors. The domestic market could become in the base of the U.S. economic model in the Biden's era. The salaries must be recovered and revert its deterioration. Some states of the American Union are applying the provision of the $15 minimum per hour. So obviously, this is the minimum, and from there to increase it. And with the new salary policy, the domestic market in the U.S., like in other countries, will become in the engine again of the economic growth. Next. So the U.S. would like to consolidate the global economic leadership and will give all the resources. However, because of the structural problems related with the loss of competitiveness and international relevance will continue. So what the U.S. will do to face an uncertain decade in which the pandemic will define the first part of this, the behavior of the global economic. COVID-19 has been the worst enemy of the U.S. Up to now, the economic policy measures have managed to solve the drop of the GDP and the recovery of the economy. So there was the return of the welfare state. So we should see that this is going to be provisional or it could be permanent as long as possible. Next one, and I think we will finish with this one. This is the conclusions. COVID-19 rolls up to now all the decisions of all the countries in the world. The economy has not been the exception. The U.S. showed economic loss again in this century. The economic policy measures will manage to contain, even at the expense of high public debt, and the benefits are still to be confirmed in 2022 and following years. The social deterioration is a new challenge that will be faced permanently by the U.S., and the same will jeopardize the fiscal policies measures of Biden government. COVID-19 broke the economic model of the U.S., and with this, it's very likely that can put an end to the American dream. For a few years, the U.S. or some very well-known economists mentioned that the American dream is it's a thing of the past. In the world could enter a new stage of the global hegemony with the dispute of it by countries like China. And with this, I end my presentation. Thank you very much for your patience. And because of the slides, I wasn't able to see. But in general, those are the ideas that I wanted to share with you regarding the U.S. and what we expect in the short run.